The first question came from Steve Leisman, the senior economist over at CNBC, and he asked Powell if he was concerned that the recent rally in the stock market may have eased financial conditions. And is he worried about the rise in the markets? And does he feel that he needs to do something about that? Now, Powell basically completely ignored the question, did not answer it, but did talk about the fact that the Fed is committed to fighting inflation, that it needs restrictive policy, and that we're not quite restrictive enough so that more rate hikes are appropriate. He pointed out that the terminal rate of interest, which is the high watermark that the FOMC members are projecting, continues to go up. In fact, right now, that terminal rate is at 5.1%, and that by the end of 2023, most of the FOMC members are looking for a Fed funds rate between 5 and 5.25. In fact, he pointed out that 17 out of the 19 FOMC members now believe that that terminal rate will peak above 5%, and that keeps increasing. And so if the inflation numbers end up surprising to the upside, well, then that peak is going to keep on ratcheting up. Now, another reporter asked him about the size of future hikes. Would he be going 50 basis points or 25 basis points? And Powell's answer was that he didn't think that the pace of the increases was really that important at this juncture. What he feels is more important is how high rates ultimately have to rise, not how quickly we get there, but also how long rates have to stay high before they can come down. Because I think the expectation is that after we have these high interest rates, in order to bring down inflation, that somehow the Fed could return interest rates to the low levels to which everybody has become accustomed. But those low levels were in fact emergency policies that were put in place first as a result of the 2008 financial crisis, and then as a result of COVID. But interest rates had no business ever being that low, and there is no reason that anybody should be expecting rates to return to those levels again. So to say that, hey, all we have to do is raise rates up to 5%, and then inflation is going to go away, and then we can bring them back down to 1 or 2%, you can't do that without sending inflation right back up, reversing all the progress that has been made. But of course, they're not actually going to make any of that progress because the rate hikes that have taken place to date are insufficient to return inflation to 2%, nor do I believe that any future rate hikes will be large enough to do the job, because they're not going to be able to complete the mission because of the problems in the economy that are going to be created along the way, and because there is no chance they're going to get any cooperation from the U.S. government, because they are not going to cut spending. Nobody has the guts to cut any government spending. Nobody wants to raise taxes on the middle class. Some people want to raise taxes on the rich, but even if they can get those tax hikes through a Republican Congress, it's not going to make a difference because there won't be enough revenue there to make any kind of meaningful reduction in the budget deficits that are at the heart of the inflation problem. Another reporter asked Powell how confident he was in the Fed's ability to get inflation under control. And again, Powell said that while the recent data is welcome, that he needs to see more substantial evidence that the reduction in inflation is on a sustainable downward path, basically repeating the identical words that he spoke earlier in his prepared remarks. He was also asked about the soft landing and in his confidence that the U.S. economy will avoid recession. And instead of talking about how confident he was that there would be no recession, he basically said that there's no way to know, that nobody can tell for sure whether or not the U.S. economy is going to have a recession. And if we do end up in recession, whether it will end up being shallow or deep. So it seems that he's waffling a bit on his soft landing and just basically saying, we have no idea what's going to happen. We're just hoping we get a soft landing. but nobody actually knows whether we're going to get a landing at all. Another reporter asked Powell to comment on the pain that he once said Americans would have to endure as a result of the rate hikes that were necessary to bring inflation back down to 2%. And Powell's answer was that the most pain is what Americans would feel if the Fed didn't raise rates enough and allowed inflation to get out of control. That, Powell said, would be the worst pain. And so the pain they're feeling now from higher mortgage rates or other higher costs related to servicing their debt is nothing compared to the pain they would feel if inflation got out of control. Well, the reality is inflation is already out of control. We're already past the point where the Fed has the ability to regain control without causing not just a recession, but a financial crisis. So Americans are going to have to endure the very pain that Powell is claiming that they're going to be spared because the Fed is now fighting inflation. Well, the time to have fought inflation has long since passed. In fact, the Fed has done everything it could to create inflation and continue to create inflation even after it was obvious what that inflation had done, because early on, Powell said that he would rather err on the side of letting inflation run too hot rather than prematurely cutting off economic growth, because he claimed that an inflation problem is easy to solve. Well, he's now finding out that it's not only difficult to solve, it is impossible without inflicting the very sort of pain that he's now convinced can be avoided because he thinks his too little too late effort is actually going to succeed. And finally, Powell got a question from a reporter as to whether or not the Fed was going to reconsider its 2% inflation target. After all, if the Fed can't really bring inflation down to 2%, why not raise the target, maybe 3% or something like that? But Powell immediately threw cold water on the idea that the Fed was going to raise its target and said, no, we are committed to 2% inflation, and that's what we're going to do. Whether or not we, at some distant point in the future, decide that we're going to revisit that topic, well, maybe, but not now. That is nothing that anybody is thinking about in the here and now. And so for now, we are committed to bringing inflation down to 2%. And I think it was very important that Powell say that, because if Powell gave the markets any hint that the Fed was wavering on that 2% commitment, that the target might be raised, the dollar and treasuries would crash and gold would go through the roof. I think the only reason that we're not seeing that happen now is because you still have players in the market who believe that the Fed is committed to 2%, and more importantly, that it can actually deliver on that commitment, which it cannot. In fact, Bill Ackman had tweeted out that he believes the Fed should right now go to a 3% target, should tell the world that our target is now 3%, because 3% is a lot more achievable than 2%, and it could be achieved with less collateral damage to the economy, to employment, to the stock market. Now, in many ways, Ackman is just talking his book. He hopes that the Fed adopts a higher inflation target because that's going to be easier for him to make money as a hedge fund manager, but it will not work. It will be disaster almost immediately, because let's say the Fed were to increase the target to 3%. Why would anybody have confidence that the Fed was committed to 3% if it gave up on its commitment to 2%? After all, the reason it would have to abandon 2% would be because the pain of getting to 2% would be too much for the Fed to bear, so it would instead avoid that by going to 3%. Well, if the Fed is going to give up on a 2% target because it's too painful to maintain it, well, what does that say about 3%? It means that when 3% becomes too painful to maintain, well, we'll go to 4%. And when 4% is too painful, we'll go to 5%. So in other words, the minute the target is raised, the target becomes meaningless, because everybody realizes that the Fed is not really committed to keeping it, that it's all bark and no bite.